Happy Friday, traders from Chicago. It's 8:18 a.m. Chicago time on the 5th of September 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. First, I'll start by apologizing about the delay. This was by far the worst commute I've had so far. Coming to work took me over an hour to commute about 5 miles because there was an issue on the way. So I'm very, very much behind and not as prepared as I'd like to be. But quick rundown of the overnight news. Key thing, of course, is the unemployment rate coming out at 7:30 Central. But let's run it down from the top. German July industrial production beat 1.9%, so we're getting some pretty decent numbers from Germany. Eurozone Q2 GDP in line with consensus at 0.0% year on year, or 0.7% year on year. Other than that, ECB's Nowotny spoke last night, reiterates that now that they are now at the lower bound on rates. Now that's a very important thing to note. As you saw yesterday, I showed you the Bund spiking up on the ECB announcement and then falling back off. Since they're at the lower bound of interest rates, that's going to influence how the Bund can trade going forward. So that was interesting to see. Fed's Fisher doubts inflation has slowed down despite the July PCE data. Fed's Kosher Lakota says U.S. needs more inflation. Interest rates aren't low enough. As far as the Ukraine-Russia issue, Pentagon Russian troops on the Ukraine border are most capable yet. They're very well armed. There are some satellite pictures or drone pictures of Russian troops amassing along the Ukrainian border. It's a cat and mouse game here with Putin. I think he's doing whatever he can to put pressure on the Ukraine to succumb to the demand of the rebels. Non-farm payrolls came out, and the looks like the number came in at 142,000 versus 230,000 expected. I want to note that this is the lowest number in 8 months. Lowest number in 8 months. Private payrolls 135,000 versus 214,000. Manufacturing payrolls 0 versus 18,000 expected. Most of the hits are in retail, some hospitality, and so on. Average hourly earnings 0.2% in line, and U.S. unemployment rate 6.1% in line with expectations. The birth debt rate 102,000 versus previous 80,000. The Ukraine and pro-Russian rebels sign a protocol in Minsk to start a ceasefire today. That was signed about 40 minutes ago. And that's it for news. As far as what's coming today, we've taken care of the payroll stuff. Other than that, I don't see much on deck here. 3-year LTRO repayment announcement, 2.5 billion expected in the euro at 10 Central, and then Fed Speaker Rosengren tonight at 7:45 Central, 7:45 p.m. in Boston. Nothing else on deck for today. Let's look at the technical side of things. Here we go. So very interesting play yesterday. If you recall, from yesterday's Trader Bite, the expectation was for it to try to push higher for responsive selling with a boundary of 2005 being the overnight point of control. 2005, and then the expectation is it would test 2005 and then sell down into the 99.25. If it's not able to hold the 99.25, 98.75, the next stop is likely to be 97 again. 97's been in place since last week. And then I'd mentioned that I did not like the 92.75 low. This is a poor low. So if anything, then the target would be down here at 91.25. The market took out the target by 2 ticks at 90.75 before recoiling back up into close to that again, the 98.75, which we've closed around. We closed at 98.75 on Friday, Tuesday, and then almost on Wednesday, and then here we miss it by just a little bit on Thursday. So essentially, the market's just closing at the same spot for the last few days. Here's another view of it. If you look at where the market has closed, there's one right there, there's one there, there's one there, and there's one right here, all within a cluster of 2 points. Market's having a hard time pushing higher. I do not like yesterday's high. We left behind a 2010 double top on the 15-minute with volume breaking hard on a ledge. I do not like that that high. So that's one that is going to be a target for now if the market decides to turn and push up through the 2001 area today at all. Overnight high 2050, right up against the 2001 low volume node that was left behind, which is also the mid. It just was not able to push through. So I won't go through yesterday's auction. I don't have time. We have 5 minutes till the open, but essentially this is what the non-farm payrolls did. The scene of the crime for today's 1990 pushed to 99.25, fell back through, and is sitting sideways. So the expectation here is for the market to potentially return to the scene of the crime. Again, the overnight session was capped by the low volume node. We're trading the high volume node, that the lower distribution and the double distribution profile that was left behind yesterday. We're stuck at the high volume node from yesterday with the overnight point of control right at it. So we're gonna probably chop around on the open before we find out what the story is. I'm expecting some responsive buying up to into the 98.75, and then a test of this 2001 early. That's what I'm looking for early on. Pretty good delta on the close yesterday, basically recovering from a negative 40,000 delta, which is unusual. It's unusual for the delta to drop to negative 40,000 on what looks like a trend, and then for it to come all the way back, basically almost to the zero line at negative 5,000. So there's some strength there that we found buyers yesterday here. Pretty good taper on this, pretty good excess low. We see it here on the point of control. Pretty decent excess low that we left behind for the short term. So the expectation is for a choppy open and then responsive buying back towards 2001 to test the overnight stat, and then potentially break through to get into the upper balance. Now remember, we are in balance here, so we've been in balance since we gapped up, and the composite point of control here, the micro composite point of control, is 98.50. We're just below it. 98.50 is right by where we closed yesterday, and it's been that closing price lately. So that's going to be an attraction. We are stuck here in the high volume area of this micro composite. So the expectation is for it to test the other side. Again, looking for 2001 to be tested this morning. I won't go too much longer. It's about 2.5 minutes to the open. I'll leave you with that thought. I want to remind you again, it is Friday. It is Friday. We're traders. We're not gamblers. It is Friday. It's not a good time to take excess risk. This is a good day again. As the trading has picked up volatility yesterday. We had some decent moves yesterday. Volatility's picked up a little bit, so opportunities will increase for both gain and loss, and it's important for you to practice patience. Friday's not a good day to get yourself in trouble and take on a position that may have you stuck and possibly end up with a margin call. Stage 5 traders, we have our noon webinar today, noon Central. I'll catch you there. We'll go over the pop quiz and a few other items. Good luck today to everyone, and I'll catch you on Monday or on Twitter. Take care.